Good morning, everybody. If it's Saturday at 8 a.m., then it's time for Coffee with Cousin Kevin. What could be better? Cheers, my friends. I'm enjoying a nice hot cup of Starbucks Pikes Peak this morning. Starbucks, if you're listening, not too late to sponsor us. Just ship me a giant box of your K-Cups. We'll be good to go. All right, so this week, what we're going to talk about, how's the market doing? Pretty damn good. Are you smarter than Cousin Kevin? This week in news, Mandalorian update. I upset some people the first time I reviewed it after the first one. Now there's, I believe, 6 out there. And, of course, the dad joke of the week. Christmas is coming upon us, folks. It's coming up very, very rapidly here. And we've got this month's quiz. Are you smarter than Cousin Kevin? Christmas trivia. If you want to take the quiz and test yourself and see if you're actually smarter than Cousin Kevin, go to planconfidence.com. Scroll down to the bottom of the page. There's a little section on the bottom that says Coffee with Cousin Kevin. Click that, and there's a link to the Christmas quiz. It's only 10 questions. I selected the medium version, and it's all about Christmas. So we're not doing any type of retirement, Medicare plan, anything like that this month. We're doing all about Christmas trivia. Just a couple questions, what kind of Christmas does Elvis Presley sing about? What's the Grinch's dog in the movie, How the Grinch Stole Christmas? It's questions like that. Now, Cousin Kevin wasn't very good at the quiz. I only got 2 right. So it's very easy to beat Cousin Kevin this month in the quiz. And when you do, and I hope you do, although many of you have not, the quiz is actually a little bit harder than I expected. I only got 2 right. I got 8 wrong. So go on there. When you do, feel free to brag about it. Send me a messenger. Go on to Facebook. Text me like my brother did. My brother took the quiz, and I believe he got 8 out of 10 right. And then he had his son, my nephew, take the quiz. I think I've got a current picture of both of them here. So my brother, Chris, took the quiz, and my favorite nephew, Parker, also took the quiz. This is pictures of them, which I know I'm going to hear from them later. They both outscored Cousin Kevin. So take the quiz. You're smarter than Cousin Kevin. You get a shout out on the Coffee with Cousin Kevin. All right, so don't forget to do that. PlanConfidence.com. Scroll down to the bottom, Coffee with Cousin Kevin. Take the quiz there. And before I forget about Plan Confidence, right now it's $30 a month to receive professional advice on your 401k plan. We're running our first special. We've never done this before. So if you're a listener or you have anybody that you know that wants advice for money that they have within their employer plan, it doesn't have to be a 401k. It could be 403b, thrift savings plan, the TSP if they're a federal employee, if they're nonprofits, whatnot, we can work with anything. Small businesses, large, simple IRAs, SEP IRAs, any type of employer-sponsored retirement plan. We could tell you exactly where to put your money within that plan. We charge $30 a month, $1 a day, less than $1 a day to get financial advice. But if you're a listener to Coffee with Cousin Kevin, I want to reward you and thank you. So you can actually get $5 off. Or if you forward it to anybody that gets 5 that wants advice on their plans, they could get $5 off. All they have to do is like one of our posts, like Coffee with Cousin Kevin, like any of the things that we post during the week, share it with their friends, and then when they go in to subscribe, just say Coffee with Cousin Kevin, and we'll give them for $25 a month, a saving of $60 per year. That could go a long way. So if you want to help out your friends, family members, co-workers, you want to gift them 401k advice this year, Plan Confidence makes an excellent Christmas gift. Keep that in mind. So for $5 off, though, like and share a post, and then when they sign up, just say Coffee with Cousin Kevin, and we'll get them for $25 a month and not $30. Okay, so that shameless plug is over. Let's see, what else are we talking about today? S&P 500. Now, again, the S&P 500 is 500 companies within America. About 70% large companies, 20% mid-size, and 10% small companies. It's what we call an index. There's about 5,000 plus stocks within the United States. This is 500 of them put into a basket, and then we monitor that basket to kind of say, how is the U.S. stock market doing? Not the economy, the stock market. The economy and the stock market are 2 different things. So It is doing great. So here is, again, because Facebook Live, we cannot splice in videos. Here's the market for the week. So you can see on Monday, pretty much remained flat. Tuesday, Wednesday, Thursday, we got a good pop. Friday, for the most of the day, it just remained flat. We started to go up pretty well, then we started to go down, and then we ended up flat. Now, for the week, we were up just under 1%, 0.73%. So for the past 2 weeks, you basically made what you could have made on your savings accounts. You could have made within 2 weeks of the stock market. The year-to-date performance of the American market, of the S&P 500, is 26.41%. So we're above 25%. Now, I'm going to preface this because this is coming up, and I have financial advisors that are asking me, and we even had a couple of our users kind of talk to us and say things like, oh, your performance sucks this year, man. I'm only up, 16, 17, 18%. Here's the deal. The U.S. stock market is up 26%. If you don't have all your money in the S&P 500 and 100% of your money within the S&P 500 fund, you're not up 26%. Period. End of story. If you're a moderate investor, which almost everybody falls into that bell curve, they fall into that moderate scale. They don't want to take too much risk. They don't want to be too conservative. They fall in that moderate scale. If you're up over 15% right now, because most moderate portfolios only have about 60% of the money within the stock market. There's what's called the old 60-40 split. Put 60% in stocks, 40% in bonds. If you have 60% of your money in the stock market, and bonds have done almost nothing this year, but if you have 60% in the stock market, you're only going to be up 16%, 15%. Your portfolio is doing exactly what it's intended to do. And guess what? You don't want to shift now into 100% and chase it. And that's what a lot of people do. Dalbar comes out with a study every year that talks about the average performance of the average investor and how they chase performance. After the markets go up, they get into it. And when the market goes down, they pull out. So they buy high and they sell low instead of buying low and selling high, or just getting an asset allocation strategy that actually works for you and then just put it on autopilot. Don't try to tweak it. Don't try to chase the performance. So again, if you're up over 16% and you're in a moderate portfolio, and if you're not sure, call your financial advisor. Go online. Find out that percentage between stocks and bonds. And if it's anywhere near 60% stocks and you're up 16% or more, you're doing phenomenal. Now, if you're in 100% stocks and you're not up over 20%, then you got a problem. Call your advisor because something is horribly going wrong or you're getting screwed on fees. Now, if you're in a conservative portfolio, most conservative portfolios are about 30% stocks and 70% bonds. Here this year, if you're in a conservative portfolio, you should be up 7, 8, 9% in your portfolio. So if you're not at that mark, then you got a problem. But if you're up 8% and you're conservative, don't worry about the stock market being up 26%. You set up your portfolio because you don't want to lose money. So the fact that you made 8% in a conservative portfolio should be mind-blowing. And if you're in 100% stocks, you should be up over 25%. If you're moderate, you should be up 16%. And if you're conservative, you should be up around 8%. So use that to check your portfolio, to check your performance for the year. And use the year-to-date number. Don't use the one-year number, because last December was a horrible December, one of the worst Decembers the stock market has ever seen. So your one-year number is going to look way below this because of 1 month of the year. Last year, last December. So use that year-to-date number, not the one-year number, and see, are you up 25, 16, or 8%? If not, talk to your financial advisor. If they can't get your portfolio to do it, sign up for Plan Confidence. We'll do it right through our website. You won't even have to talk to an advisor. You won't have to have anyone coming out to your home or office to visit you or anything. We literally tell you what to do with your money within your retirement plan, and life goes on. And we do it for less than $1 a day. And if you like and share, we'll do it for 82 cents a day, 25 bucks a month, 82 cents. So S&P 500 funds. Now let's talk about a little too why the market was actually flat on Friday. I've got two headlines here. We've got the impeachment. The Judiciary Committee approves the articles of impeachment against Trump, was one of them. And then we have the deal with China, phase one deal with China. What does that mean? It means that there were tariffs that were set to go into effect this Sunday, tomorrow that are not going to go into effect. All the other tariffs and what they call bucket 1, 2, and 3 all stay the same. The new tariffs that were supposed to go into place will not go into place, and some other tariffs that were supposed to rise are not going to rise. So essentially, all we did was just put off what's going on. China allegedly is going to buy more agricultural products, though they can't commit to a number. Although the U.S. is, throwing out numbers, China's going, we never set a number. All we've done is we've got rhetoric to push the can down the road. Now, with these two headlines, a China trade deal and the impeachment, you would think one would make the market go up and one would make the market go down on what we call headline risk. Headline risk is what's coming through the headlines of the newspapers. What's going on in the world or the economy that could actually move the markets. So we've got the impeachment of Trump, and then we've got the China deal. So raise your hand if you're out there, if you think the impeachment with Trump would make the market go down. Okay, put your hands down. Now raise your hand if you think the China deal would make the markets go down. So here's the thing. The China deal came out and the markets went down. The impeachment news came out and the markets went sky high. Why? Because the impeachment committee came out with everything that we've already known. Markets hate uncertainty. Markets don't care if it's a Democrat or if it's a Republican. If the House is Democrat, the Senate's Democrat, Republican, markets don't care. They just want to know who's in office, how do we need to shift our investments. So when the new impeachment, or not new, when the impeachment news came out, it was everything that we've already known for months. So the markets went, all right, there's no new charges, no surprises, anything like that. We could continue to invest the way that we're investing. Now, when the China news came out, the markets actually went down fairly rapidly, fairly quickly. And the reason being is there's an old adage called buy the rumor, sell the news. When the news of the deal came out, everyone realized it wasn't much of a deal, that we're still going to be dealing with the uncertainty of possibly rising tariffs next year, of China dragging their feet, and why wouldn't they? Now, I will say China's probably going to be more anxious to make a deal now with this impeachment news that came out, because there's zero chance that Trump could get impeached by the Senate unless something new comes out. So China's now going, we're going to have to deal with this guy for another year, good or bad, because even if he loses the election next November, he's still in office till January of 2021. So we've got a whole year left with Trump, whether you like that or not. So China now realizes that the impeachment hearings, whatever, are not going to get rid of Trump. So he's going to be up for re-election. He may or may not win another 4 years. But for sure, he's going to be around until January 2021. So now China needs to make a deal. What they're not saying is the Chinese economy is also slowing down. And there's a lot of things going on that could be problematic for China. So with that news, you think the impeachment hearing would make the market go down and the China news would make it go up, but it doesn't. They follow the adage, buy the rumor, sell the news. When there's a rumor of a deal, the market goes sky high. When the deal comes out with the actual terms, it's like, this isn't much of a deal. So keep that in mind as you're looking. Okay, real quick, Disney. Think about Disney for a minute. The library of movies and everything. They said, hey, we're not going to rest on our laurels. We're going to come out with new content as well. We're going to compete with Amazon Prime, and we're going to compete with Netflix and the really, really shitty offering that Apple put out for Apple TV, which is absolutely horrible. World's largest company, and they can't even get decent. They can't even compete with Netflix or Amazon Prime, but Disney did. And Disney just didn't say, hey, we're going to rest on our laurels and put out everything that we've ever produced. We're going to start producing new content. And they came out with The Mandalorian. Star Wars fans like myself were very excited. And then I watched the first episode and I went, wow, this is really bad. And then I watched the second and third and I went, okay, this is okay. Yesterday I watched the sixth episode and I went, this is really effing boring. It's the same damn format every single episode. The Boba Fett lookalike character goes to a different world. He needs to help people on the different world. They all try to betray him on the different world. And then him and Baby Yoda take off in their spaceship and they go someplace else. It's really lazy, Jon Favreau. We've had so much more hope. especially since I'm catching up on the Marvel stuff, and I know you had a big footprint in that. So I know I'm going to trigger, just as I triggered a lot of Democrats a couple weeks ago with cousin Kevin. I know I'm going to trigger some Star Wars fans here, but I'm saying, damn. That was one of the reasons why I signed up for Disney Plus, who, by the way, is supposed to hit 20 million monthly users, paying about $8 a month, 20 million monthly users, by year end or so. That's almost $2 billion in revenue a year. And people like me signed up because of the new content, not the old content. So come on, Disney, step it up there. I was a little disappointed. All right, we're at the end here. 82 cents a day, $5 off. Like and share. Sign up for Plant Confidence. Use coffee with cousin Kevin, and you will get that $5 off. Or tell your friends and family to get that $5 off if they're investing in their plans and they need help. Okay, I'm gonna have to show you this this joke because it makes more sense. But here's the corny dad joke of the week, and I expect y'all to use it over the next week and tell me how it goes over in your office and family. But why can't you hear a pterodactyl go to the bathroom? Where are we? Because the P is silent. Pterodactyl, get it? P-T-E-R, pterodactyl. The P is silent. Anyway, thank you for tuning in for another week of Coffee with Cousin Kevin. Until I see you next week, peace.